Focus. Ideate. Innovate. Enable.
Hello and welcome to India Dialogue Risk Management Special. I'm Madhu Bhandari. The COVID-19 pandemic has thrown unprecedented challenges to businesses around the world. Nations, governments, economies, and business leaders have had to be extremely agile and respond with unprecedented measures. On this very special conversation today, we are deep diving into the risk management practices that India Inc. has been adopting through various Black Swan events, the lessons we can learn from this pandemic in terms of risk management for the future, development of future-ready risk officers, the impact of COVID-19 on insurance and reinsurance sectors, and lots more. Let me welcome our panel of experts on the show today. Vijay Kumar Venkatraman, MD and CEO of NCDEX. Gopal Balachandran, CFO and Chief Risk Officer at ICICI Lombard. Rohit Boda, Managing Director of JB Boda Group. Anita Punwani, Deputy Chair, Institute of Risk Management Global. And Harsh Shah, CEO, India Affiliate of Institute of Risk Management UK. Welcome everyone. Thanks very much for joining us here today. The COVID-19 pandemic has indeed shifted the attention of all enterprises towards the function of risk management. It's a function that's becoming more and more crucial for all enterprises today. Gopal, first up, let me ask you, at ICICI Lombard, how have you been doing risk management for yourself, and how have you been mitigating risks for your various customers?
I think we are kind of opened up to some few incremental risks that we see. I mean, we as an entity, obviously, when we do a risk transfer, we work with multiple counterparty risks. So in that sense, that becomes a foremost element of importance that we have to manage. Equally, what we are exposed to, as we all know, we are all working in a work from home environment, which kind of significantly necessitates us to manage the cyber security element very well. So you need to be completely prepared for that. Thirdly, you also have to make sure that the markets are very, very volatile at this point of time. And given the increased volatility that we are all experiencing, and we as a company also collects premium from customers and obviously manage insofar as investments are concerned. So hence, to that extent, managing the investment risk also becomes of paramount significance when you look at it from the ICICI Lombard standpoint.
Right. And Vijay, if I can come to you, volatility and uncertainty is something that Gopal just spoke about. From a regulation perspective, there are over 150 new compliance obligations that a lot of organizations may have to be dealing with because of COVID-19. As far as agri-businesses are concerned, what are the key areas of compliance that have been impacted? And how is COVID-19 impacting risk management strategies and practices for players across the agri-value chain?
Agri-businesses have, of course, to some extent been affected because of the physical movement of goods, but even those are now getting back to a reasonable normalcy, I must say. NCDEX provides various instruments, options and futures, and recently we've launched an index called AgriDex, and depending on what product or what supply chain or value chain you happen to be in, we have a range of instruments that you can use as an enterprise to protect yourself from the volatile price movements that are intrinsic in these uncertain times. So one of the things we do at NCDEX is to continually disseminate knowledge about these instruments, and they could be with processors, they could be with traders, they could be with farmers or farmer producer organizations. And in times like this, even the government is certainly keen that many of these organizations and entities use risk management tools. So SEBI in particular has asked for listed companies to disclose the amount of exposure they carry to commodities, and also disclose the amount of protection that they have taken using such instruments.
Right. Interesting. Let me also come to Rohit. The reinsurance sector is still at a nascent stage in India. What has the impact of COVID-19 been on this particular segment, on the capital base of reinsurance markets because of the collapse in global trade, and what is the road looking like now as business slowly resumes?
India is a huge economy. As innovation takes place, artificial intelligence comes into the picture. Segments like motor, health, which are the insurance companies are investing highly into the tech. The best way for an insurance industry for a risk transfer mechanism can be reinsurance. And as far as the capital base is concerned, yes, it has to be managed well. Otherwise, there are a lot of possibility of the companies going into runoff, where a new mechanism would come into the picture. Of course, we have not seen much of the runoff business in India, but runoff does take place in a lot of part of the world. And according to PwC, what they say, there were 100 deals happening that happened last year on the runoff space. So we can clearly see the volatility that this segment brings along with the opportunities. But as far as India is concerned, yes, there are a lot of way ahead, and in the next decade, we are seeing the industry to grow to a great extent.
All right. Okay. Let me also add a little bit of an international perspective to this conversation. Anita, you're joining us from the UK. Thanks very much for being with us. First up, give us a sense of the impact of the pandemic on businesses and the key responses it has evoked from businesses out there, especially with respect to risk management.
UK perspective, organizations have necessarily focused on the health, the safety, the welfare of people, the continuity of their business operations, and in some cases, even survival. And in my view, those organizations that have focused on their key dependencies and some of the things we've just discussed around financial resilience, but also the resilience of their ICT, the resilience of their supply chain, and also the dependency on people, and using creative solutions to be able to find ways forward in these challenging times. And in terms of people, the organizations that have really fared well and protected their reputation have focused on protecting staff jobs, understanding and meeting current customer needs, and also the needs of the local community, and helping in whatever way they can.
Right. Interesting. Yes. Building on existing relationships is extremely critical. But, what about startups? What about small businesses? Let me bring in Harsh at this point. Harsh, do you believe that going forward, risk management will become a critical function for organizations of all shapes and sizes across sectors? And beyond compliance, will larger companies now post the pandemic focus a lot more on building this robust culture of risk management and risk-based decision making within the organization?
Over 97% family-run businesses in India don't have a succession plan in place, and about 58% of all cyber attacks target small businesses because they're more vulnerable. Additionally, this sector also faces the highest amount of liquidity, with a credit gap of over 16 lakh crore. Now, absence of risk management is definitely making this sector vulnerable, as a large chunk of these startups and SMEs do not end up completing even 5 years in operations. The risk of unknown has definitely increased, and this will call for a serious investment and restructuring of enterprise risk management for all types of organizations, with a focus on building resilience, having a robust risk response strategy, understanding black swans and gray rhinos, and really creating that culture that supports risk-based decision making.
Well, on that note, it's time for a very quick break right now, but the conversation continues on the other side. Stay with us right here on India Dialogue Risk Management Special, exclusively on CNBC TV 18. Welcome back to India Dialogue Risk Management Special. On the show today, we are talking about the risk management strategies that India Inc. is adopting through the pandemic and the road ahead. Let's spend a little bit of time in this segment on the road ahead. And Vijay, if I may begin with you, the NCDEX has just launched 2 rainfall-based indices to help the agriculture value chain in hedging and mitigating risks. It had also recently commenced trading in the country's first agri-futures index that you spoke about earlier. Give us a sense of the kind of direction that NCDEX will be taking as far as innovating is concerned, as far as innovation in terms of these risk management tools is concerned for the entire agri value chain?
We've launched AgriDex, which is a composite of 10 of our most liquid futures contracts. And that's the first for the country. And we look forward to participation by both institutional and retail sort of entities in that index. We've published 2 indices, both to do with rainfall. As you are aware, rainfall is a critical part of and a critical need for agriculture in the country. And these are indices which will be published, and data will be available to a wide variety of policymakers as well as entities which have exposures which are linked to the monsoons. They could be from a variety of industries. And once these sort of published indices get popular, then we will design and seek approval for specific indices that can be traded.
Fair enough. Gopal, if I can also bring you in at this point, an emerging risk that has been a top concern for CXOs around the world recently has, of course, been cyber and data security. And some of you spoke about that earlier. The pandemic has, in a sense, increased the use of technology many times over in all walks of life for us. So has it also forced companies to relook at their cyber risk management strategies? What have you been hearing from clients? And which other emerging risks are you looking to mitigate, say, in the next decade or so?
All of us in these times are working in a work from home environment. And clearly, the need of the hour is to ensure that we are able to protect the data as much as what we could do. And in the process, hence, there is a need for you to institute appropriate information security measures, which could range with respect to the extent of access that is required to be given for the people who is required to work in a work from home environment. And at the same time, you also need to look at what kind of information security policies you have in place, whereby you are still able to safeguard the data with respect to cyber security. And there again, from an insurance company standpoint, these days there are those cyber policies that are significantly available. And one would kind of strongly suggest corporates, or even for the matter of fact, SMEs, or even or even individuals, given the fact that they are all exposed to working in a cyber scenario, it is better that they're able to manage that risk as well by taking appropriate protection in the form of an insurance transfers. Those are the things that I would kind of talk about when it comes to cybersecurity and other risks that corporates can be managed.
Right. Okay. Valuable tips there from you, Gopal. Rohit, as far as the reinsurance segment is concerned, what is the road ahead looking like? Do you expect India to become a major reinsurance hub in future? Do you expect far more competition in the landscape from established foreign players, considering the opportunities here?
It's not only about the traditional capacity and the capital what the reinsurers are bringing in, but there is a lot of interest from the investment sectors globally who put their money, their capital in the funds, and these funds are then fronted by the reinsurance markets. Now, where do these generally funds come into the play is when there is a placement, the reinsurance placement on the retrocession market that is required. And if the funds are getting interest in a country like India, that means that there is a lot of interest, there is a lot of growth potential what they are seeing in next 1 decade. Now the capital base is surely expected to be eroded, and the path to recover is going to have many factors. It is going to take time. The investment portfolios of the reinsurance companies have gone for a toss. The cash flow, there are cash flow issues, and we are seeing a lot of layoffs happening globally. The underwriting strategies of the reinsurance companies are re-looked at, and the earning powers have again been measured in an appropriate way just to see where the losses can be curtailed as far as possible. Now all this is eventually going to lead to a rising reinsurance prices during the upcoming 1st January 2021 renewals. And S&P has warned about the rating revision. I mean, if an adequate capital is not pumped in, then there are possibilities for some of the reinsurance companies to be downgraded, and there can be a decline in the capital resiliency. So,
Right.
yes, of course, the road ahead is surely positive.
Okay. So, Anita, let me also bring you in. This isn't really the first pandemic that the world has seen, yet it did spread across the world very, very quickly and almost at the same time, impacting businesses around the globe very simultaneously. So, do you believe that this particular pandemic will change the way organizations structure their whole risk management frameworks and practices? What are the key drivers going to be, and what makes it so different from earlier pandemics? The lessons, if we haven't learned them before, why do you think we are going to learn them now?
In my experience, the frameworks are set up to look at public health risks, business continuity risks, and that demonstrates why there has been, in large part, resilience, particularly from the UK perspective, in terms of food supplies. In the first few days, there was some panic, but it was more unprecedented levels of demand rather than the supply. The supply was secure, and that was the message that supermarkets were sending out. So organizations that have taken risk management seriously, they've learned lessons from past crises. So I think the bedrock is there, it's sound, but it's really a question of this link between actually learning the lessons, understanding the early warning signals, the incidents that we discussed, and actually responding, because there is an investment that's required. As we understand in the case of insurance, you have to make an investment in order to protect your organization and in a wider context, protect society. And I think that's going to be one of the key learnings from this, that we say in risk management, understand your context. Well, I think the social context has changed. And it's definitely a question of putting people first and recognizing the interdependency of any organization on
Right.
the people within the organization, but the community that it's serving. And those organizations are going to not only survive, but I think thrive.
Right. Putting people first is also a function of risk literacy, of awareness, of enterprise risk management education. Harsh, how do you see all of these things shaping up in the future? What role will these play in the development of future ready chief risk officers?
Enterprise risk management as a formal career path will be very important for a country like India. And as the world leader for enterprise risk management qualifications, IRM has been supporting small, medium, large organizations across 143 countries, where our qualified members and students are working in various sectors, with many of them graduating to the role of a chief risk officer as they start with a level 1 qualification and move to a level 5 qualification. And they get recognized with a formal designation, just like an accountant or an investment professional or any other professional qualification. In fact, we have professionals in India who have pursued our exams and qualifications back in 2000 when we didn't have exam centers. And today they are working at reputed organizations as professionals, chief risk officers, risk heads, and in various capacities. So we are very committed and excited to build an ecosystem in India and really support and develop the next generation of chief risk officers who are ready to take on challenges in today's uncertain and complex world.
All right. Finally, I'm going to ask each one of you about your mantras, your single biggest mantra for companies or chief risk officers of the future on being future ready in the post COVID-19 world. And Vijay, if I can begin with you, your single biggest mantra for companies or chief risk officers on being future ready in a post pandemic world.
Yeah, I think I would say that overconfidence is a bad thing. And therefore, risk management is not a decision to be made, it's a habit to be inculcated. And I think the faster organizations realize that, the healthier they will be, and the longer these organizations will survive, and profitably so.
Right. All right. Gopal, what about you?
Clearly, the need of the hour, I would say, is to make sure that you are able to institute appropriate risk mitigation measures once you come across this event, and that will kind of be largely validated insofar as the ecosystem outcome is concerned.
Right. Rohit?
Next couple of quarters are going to be extremely volatile. It is a very much of a wait and watch situation, but of course, one thing is for sure, that pandemic has led everybody look at the risk and the risk transfer mechanism in a very different way than they were looking at it pre-COVID. I mean, be it your own managing your own homes, or managing your own life, or managing your own health. and that is, of course, moving along with the times, injecting right capital into the organizations, working with the skilled manpower. Things are, of course, opportunistic as far as the post-pandemic era goes.
Absolutely. All right, Anita, what about you?
Accept the new reality, accept that we work in a new environment, that this pandemic, as well as other social changes, demonstrate that. And organizations that are able to understand their context, are able to communicate effectively with their stakeholders and adapt in a creative way to the new environment will be successful.
All right, and Harsh?
I would just say that, let's look at risk beyond finance and insurance. Let's look at an enterprise-wide perspective. And also, risk management is not an expense, it's an investment which will definitely give you the returns in the long run.
All right, thank you everyone for joining us here today, taking our time and sharing your valuable insights on risk management practices. Well, that's a wrap of this special conversation. News and updates continue on CNBC TV18. Thanks for joining us. Until next time, it's goodbye.
Focus. Ideate. Innovate. Enable.